Okay, we're recording. I've been asking for feedback on training, and one thing that came up is shorter training sessions, that maybe 90 minutes is just too much to absorb. I also was told maybe quizzes or homework would be handy. Even though that might be more work on my part, I'm fine with that because I want these to be as successful as possible. So today's session is going to be under 1 hour. I won't have homework because I haven't had time to think about homework or how to do it, but I promise it won't be long, maybe 30 minutes. So it's the same amount of time. And then what I'll do is I'll have like a 55-minute session and then maybe have questions that I can email out that people can answer. That'll also offer the opportunity for more Q&A if anyone needs it. But my goal now is 55 minutes at the most. It was even offered, suggestion was even offered less than that. Just focus on something very specific and cover it thoroughly. Stop there. Today, I want to talk about adding inventory items to the system first time and making inventory item adjustments. When you are first starting out, you might be adding items, invoice items as we call them. You probably know we call anything that can show up on an invoice item, because it could be a discount, subtotal, group item, something like that. A lot of us just call it inventory list, but it's really an invoice item list. When you want to add items for the very first time, let's say, for example, that you discovered that you've got a rooftop unit of some kind, you want to add it to the system for the first time, then you might want to put create a new item in Total Office Manager and then do an item adjustment so you can put those in there. So let me give you a specific example. Let's say that we are stocking a certain kind of air handler, and it's a serialized item. And maybe the number is going to be called air handler 003600. That's the air handler. And then we'll categorize that. Do that later, but we give it a category. That's important for searching and organizing. And then for a description, air handler, that's the description to buy it. Maybe we'll put in 3-point ton airflow. And then there's a preference that's turned on automatically that copies that over to the sales description. The sales description, of course, is what the customer is going to see. Purchase description is what shows on the PO. And then you have an estimated cost that you don't have to use, but this would tell the buyer about what we expect to pay for these. We expect to pay about $365 for them. And then we can establish a retail price based on these markups here. And right now it comes up to $629 according to this markup method. And I can copy that over to the retail price. And then we can populate other fields. I won't bother. Here's what I wanted to show you. This is the important part. The next step is to go to the accounting tab and make sure the income is set to the correct income, like equipment. And your COGS is the correct COGS. Again, equipment. So we find equipment COGS. And then your asset account, inventory. Usually you only have one, but some people recommend an inventory equipment, inventory parts and materials. And I'm okay with that. I'm fine with that. I just don't do that because I try to keep it easy in my demos. So now we go to the inventory tab. We have one opportunity to add these to the inventory system here. And you'll never see this opportunity again on this form. There's reasons for that. But here's what you would do. You would say, okay, I want to put these in the main warehouse. And the serial number, you just look at the item, the box, and you type in the serial number. Maybe that's the serial number right there. And then if you put in a cost, this is important. if you put in a cost, you will affect your financials. This will go on the balance sheet. So if you put in a cost of the estimated 365, for example, then you're affecting your financial statements. And you need to tell the software what date you want your financial statements affected. And maybe you want that to be as of January 1st of this year. And you might want to departmentalize it, but at this point, it doesn't matter a lot. And you put in a memo. And the memo might be something like catch up, something like that, something that makes sense to you. Or it could be inventory count. You know, you did an inventory count and you discovered things. So right now, you would just continue on with these serial numbers and pick the warehouse and pick the date, 365, 365, pick the date, first. In my memo, I may not need to put catch up or whatever it was, inventory count on each one, because it's obvious if you're looking at the top one, but these appear elsewhere. So I do want to go ahead and put that in. So when I hit save and close, my balance sheet is going to show this inventory. But as you probably know, in accounting, you have to have at least two things happen. You have to have one credit and one debit. If you don't know the credits and debits, that could be your own homework. You have to have at least one credit and one debit. So something has to increase here, and it's going to be your inventory account. And something else has to either increase or decrease. That's the
Cost of goods.
No. You are wrong, sir. But I'm glad you spoke up. So cost of goods sold would not be affected because we haven't sold it yet. So what else would be affected? We have to affect something else. Anybody know what it would be?
Yeah, inventory.
Well, we got that one already.
Asset. Okay.
So inventory is going to go up. We're going to debit inventory, because debiting assets makes them go up. But we have to have something else go up or down.
If you haven't paid for it yet, is it accounts? So it's accounts payable.
Well, that's a good. I'm glad you said that. In this case, no, because we're not entering a bill, so there's nobody to pay. So this is kind of tricky, isn't it? And don't feel bad, because this is the kind of thing that confuses even longtime bookkeepers. The thing that has to go up is equity. Equity. So in a company, you have this thing called equity, and that is your assets minus your liabilities. Whatever's left over could be considered equity in the business, like equity in your house. So if you have equity in your house, what is that? That's the value of your house minus how much you owe the bank, and that's your equity.
Yeah.
And so equity is going to go up. So in this case, two things go up. It's not up and down, but we have to have at least one credit, one debit. That's why somebody invented the word credit debit, because it's possible two things go down or two things go up, or one thing goes up and one thing goes down, but two things always have to happen. So in this case, the inventory asset on the balance sheet is going to go up, and the equity is going to go up. So I'm going to hit save and close, or you know what I'll do? I'll hit menu save. And then let's go back to the inventory tab, and you'll notice I can't do anything. I can't edit it. It was a one-time event, and I'm not allowed to change it here anyway. There's reasons for that I can go into if someone wants me to, but you can't do it here. So now you have your, yeah.
Sorry. Question is, you're showing the populating of the serial number. If a company was using a barcode scanner, they could simply scan the serial number in there, correct?
That's right. Yeah, they could just scan it in there.
And this is a big thing when you're talking to companies that are moving to us for the first time, pointing that out from a sales perspective is, helping them identify how easy it is. And the second thing is that you're alleviating mistakes by somebody writing something down a piece of paper and then trying to transfer it manually.
That's right. And by the way, you wouldn't know this unless you've worked in the industry, but most all of these boxes that have for equipment that have serial numbers, they typically have multiple stickers with the serial number on it. And so that way, when you go out to your warehouse and you've got 10 boxes, typically you can peel 10 stickers off and put them on a piece of paper and hand them to the office. And then the office could enter them by scanning those labels. So most boxes have 2 or more labels on them with a serial number. They just do that for convenience. Typically, the supplier peels one of them off. They give it to you. You peel one off. Certainly, you want your installers to peel them off. So you'll have an installer who will do the same thing. They'll peel one off. But now those are in stock and you can sell them.
James,
Can I ask?
question?
Tim, go ahead.
Okay, so like when you say like the purchase description versus the sales description, right?
Huh?
So only the sales description is gonna show up when I put this on an estimate.
That's right.
Okay. So we could have something on the purchase. You could have something for internal use, and then something you don't want the customer to see.
That's
And
right.
they won't. Okay. All right.
Yeah, so under purchase description, it could say, don't forget to order the heating elements, or be sure to pick the color, or we never buy white, or be sure you get the right configuration, horizontal or vertical, that kind of.
And I might be straying on my next question. Let me know if I am. But if we're doing this as a serialized inventory, what if it's a group and we put in several pieces of equipment and we just have one name for the job, right? But then can we hide the pieces of equipment on an estimate? Does that make
Yes,
sense? So if I'm doing a group, yeah, and I just have like replacing furnace, and I have all of the components that go with that, can I have it where on the estimate it just shows just the one thing with the one price on there?
oh yeah, because keep in mind, it's just like flat rate pricing. The group can be hidden. You can say, don't show the items of a group.
Okay.
Jonathan?
On the inventory tab, when you set the reorder point, from my understanding, that since you have 3 on hand, if I set that to reorder point as 1, I shouldn't get a reorder point alert unless I get to 1 or 0. Is that the way that it should work?
Yes, that's right.
So if you now save it, once it's complete, if that item's ready to be saved for air handler 003, if I go and I put that on an estimate, I seem to always get a reorder point alert no matter what I set the reorder point to be.
Well, so let's talk about reorder points.
If
You have,
I click that though, it'll work properly. What you're doing right now.
yes, and that's really what it's looking at. This
Oh.
reorder point is left over from the program before we had reorder points by warehouse. So that reorder point right there is is it's really better to go to the general tab setup button, as it's mentioning. So
All right.
here you establish your reorder points by warehouse. Let's say, for example, that the minimum we want to have on hand is 1, and the maximum we ever want to have is 5. What that tells the software is when you get down to, a better way to understand it is, let me put it in 2. the minimum I want to have is 2. When you get down to 1, order 4, because that'll bring me up to the maximum that I want to have, 5. So let me say that again. I'm telling the software I want to have at least 2 of these. So if I have 2 on hand, don't do anything. But when you get down to 1, I want you to order 4. When you get down to 0, I want you to order 5, because I want to have no more than 5 on hand. Does that make sense to everybody?
Yes.
Okay, good. All right, and so that's a nice feature. Most software doesn't have this feature. It isn't totally unique to us, but many programs don't have the ability to create a minimum, maximum on hand per warehouse. And that's important because you may want to have, certainly not an air handler, but you may want to have certain parts on each truck. If you're a plumbing company, you really ought to have 1 water heater on every truck. Every truck should have a water heater because you may need it. But the warehouse should have more than 1.
James, for the sake of this video that you're doing here, will you show how that reordering is affected and triggered?
I will, yeah. So we currently have 3 of these on order, 3 on hand, and none of them are on back order. So what's back order mean? Sometimes there's a tooltip. We should be putting tooltips everywhere. Programmers are terrible about doing it because they don't always know what to say. But if you point at somewhere, you should get a little tooltip, hopefully. And this one tells you a purchase order exists, but the items have not been received. That's what a back order would mean. So if it's been back order, that means we do have a PO, we just haven't received it. And we have a feature turned on called reserve items, item reservations. That means that the item is in stock, but somebody else has claimed it. So Roger might have sold this air handler, but he hasn't taken it yet. He doesn't want us selling it. So he can reserve it. And that's a different video, but he can reserve that item on an item receipt. He can reserve it on a work order and other places. And so if he had done that, then we would have 3 on hand, 1 reserved, and that means 2 are available for us. Now, if we were to open an invoice and type in this new air handler, select it, then we can come over to the warehouse selector and we'd be able to see how many we have in each location. And that's pretty unique too. That's a unique feature, really. And the same thing, the same thing would be true if I typed in another inventory item part. But this isn't serialized. So another column comes up that's confusing to people, and I wanted to make sure we talked about it. We have in the main warehouse -3. So that means we've been selling into the negative territory. We should never do that. As of the transaction date, we have 0. As you know, you can backdate or future date an invoice. So if I were to type in a new date, I could potentially see different numbers under the transaction date. I didn't in this case, but what the transaction date quantity is doing is it's looking to see how many you had back then, or how many you would have in the future, because you could have future dated transaction. So the transaction date quantity is the quantity on hand for that day. And that's pretty smart software. It can go back in time and figure out how many you had back then. So there's 2 numbers. There's how many you have, regardless of today's date. That should be when you go back to the warehouse, you should actually see that back there. And then there is how many you would have had back on that transaction date. That could be in the future or could be in the past. Any questions on what that meant?
Is there, when you do that drop down and it shows you new options like that, is there a way to have it where the programmers can have it where that can give you a tooltip when you hover over those as well, or is that a limitation on the programming language or something?
That's a limitation, I think. I don't think we can do that.
Okay.
It's hard enough to get them to put tooltips where it's easy.
Tooltips are great.
They are, and a lot of times it's Erica and I putting those in, and pretty soon, hopefully, Bryant. But it takes a person that has knowledge to So here's a better set of numbers. As of the transaction date, we had 86. But right now, if we go back in the warehouse, we would have 75. So that's a neat feature. It may not make a lot of sense as to why you'd want that. Certainly, software companies are not going to do this. I don't know of anyone that's done it, but I haven't looked. But this is an unusual feature, but that's the attention to detail that I think Aptora is so good at. That is important for a knowledgeable user. Okay, so if we had one in reserve, we wouldn't have seen it there because that's what's available to sell. So the item reservation feature would prevent us from picking an item that's on reserve unless we're the person that reserved it. Okay, so if you want to get a current count, like somebody's back in the back adjusting these, you can always hit refresh. That refresh button would just refresh what you see here, the available units, etc. It just refreshes this little area right here. All right, I'm ready to close this and move on. Same topic. But before I close this form, were there any questions about what we talked about? Okay, so I'll hit save.
Is there a help topic on the when you were doing the drop down and it gave you the two columns? Earlier when I was asking about the tooltip.
I don't know.
I bet there's a lot of users who don't know what that means. They, of course, they would know what the quantity means, but they wouldn't know what the other column means.
Yeah, probably not.
I don't think that was always in there either. I think
that's fairly new.
Yeah.
All right, save and close. That's done. Now, let's go back to company, because under company, we have most of our inventory features. It's under company because it's company-wide. Inventory has something to do with customers. It has something to do with vendors. So we put it in a company because it's company-wide. Go down to inventory adjustment, and here we have various adjustment opportunities. Now, this one is disabled, grayed out, because I have a certain feature turned on. I probably won't go into. That's grayed out only because I have a certain feature turned on and it's no longer an option. It could also be grayed out because I don't have permission to get to it. Remember, I could not, it's possible I don't have permission. But in my case, I know it's grayed out because I have a certain feature turned on. These are my opportunities to adjust inventory. So for example, if I want to adjust serialized items, I open up the serialized adjustment list and I can see all the adjustments that people have been making. And you'll notice that I have the adjustment right here. So there's today's date. The entry number was auto because we did it elsewhere. The system did this. And notice the account affected was open balance equity. Remember I said it has to affect something else, and I said it was equity? That's it. It knew which one to put it into. Opening balance equity. That's a chart of account. So that's chart of account 13050. Let's open up chart of accounts. Let's go by number. Let's type in the 13050. There it is. Let's open it. And so here is an account, an equity type, and the name is called opening balance equity. And under description, it is telling you what it is, but it's also telling you that it was created automatically by Tom. You can't get rid of it. You can't delete this. The reason why is it needed to know where to find it, so it created it itself. So let's open that. Here it is. So here's the serial number adjustment. And it just created this automatically. Now, it knew who I was. There's my username. And today's date is wrong because I'm in a demo database and it still thinks it's 16. Erica's creating a new demo database for us. It'll have a date in the future. But see the memo on each line? That's why it was important to put a memo in each line, because someone may need to find out why you did that. So if we wanted to, we could right click here and do a new one, add serial numbers. And we could type in the day. The day's important because this is when it'll be affected. And it may be that, today is 2/20/20. So I'll type in today's date. And when I hit the drop down, it's only going to show me serialized items, of course. And I might have found a widget. We didn't even know we had the widget. We were cleaning out the warehouse, and by golly, there was a widget right there under the desk. And so we might want to put this widget into inventory. So we are going to find the inventory account. And inventory is
Did we lose him?
Sound like it.
There he is.
everybody there?
Yeah.
I got a message saying, that's weird. I got a pop-up saying poor internet connection, but my internet connection should be really good.
That happened to me earlier when I was on the phone earlier this morning. Yes.
All right. So don't know what you missed, but here we right-clicked and did new. And now we have an opportunity to add serial numbers. If we hit the drop down, it's going to show us only serialized items. So we have to have added it already. And then we can pick widget. Maybe we found a widget. We were cleaning the back warehouse and we found a widget. We didn't know we had any, and there was one there. And I have to tell the software what account is affected, and it's going to be the inventory account. Inventory is an other current asset. There it is. And it says, well, usually a cost of goods sold or an expense account is expected here. Are you sure? Yeah, I'm sure. Reason why is I'm putting inventory in. I'm not taking it out. And then I'll type in a serial number of the widget that we found. And I'll tell the software where I want to put it. Just found it today. Found it today. And I can put in a value. Now keep in mind, it may seem obvious to put a value in, but you may not want to. because it's possible you didn't pay for this widget. You found it. You didn't pay for it. You might think, well, certainly I paid for it, but you might have paid for it and already called it an expense because it's not in inventory, obviously, because you just found it. And so you've already bought it from somebody and paid for it. And probably you called it a cost of goods sold already. So you might want to be careful about entering a value because when you do that, you're creating a taxable event. So in other words, if you were to type in 365, the software is going to add $365 to your equity, your balance sheet. And the IRS can come along and say, well, hold on a minute. You just increased your net worth by 365 and we want our share of that. That's taxable money. You can't just put 365 on your balance sheet out of thin air. You have to pay taxes on it. That might be the right thing to do, but it may not be. That's not something tech support would help with. That's something that you would talk to your accountant about. Now, if you buy training, you're buying consulting. So when you're talking to a trainer is at least a level 3 support person. So a trainer can give advice. Certainly on-site training can give advice if they're comfortable with it. But tech support cannot. So be careful, you're creating a taxable event. Potentially. You could always get rid of it later. You're creating potentially a taxable event. All right, so now you put a serial number in. You could departmentalize it, but at this point, the department selection isn't that important, and here's why. We don't departmentalize your assets currently. Just we don't have any reason. When you go to sell it, though, it cares about the department. But we don't really have commercial HVAC inventory. We don't have plumbing inventory. We don't have residential inventory. The reason why is there's no reason to separate inventory by department. And also, it's not a good idea because you have overlapping departments. So in other words, you could buy a 40 amp 2-pole breaker switch, right? 40 amp 2-pole breaker. We all probably know what that is. You've seen them in your breaker panel. Does that belong to the electrical department? Sure it does. Does it belong to the plumbing department? Sure it does. Wait, what? Plumbers? Yeah, because that 40 amp breaker could be used for an electric water heater. And it also belongs to the residential division because it could be needed when we replace the air conditioning system. So what do? Well, we don't do anything. We forget it. We don't identify the department. We do that when we sell it. Now that's important. That will come up in demos because people will ask you, can I departmentalize my breaker? And they'll maybe even tell you, in our software program, we have cost of goods sold accounts for each of our departments. And they do that because their software doesn't work properly. You don't need departmentalized chart of accounts. You just need equipment. Now, what kind of equipment is that? A water heater? Then that belongs to the plumbing department, doesn't it? Yes. But what if it's an air conditioner or an air handler? That's HVAC, right? Yes. So don't you need two equipment in here for each one? No. Why not? Because your reports can be segmented by department. So when you go to print an income statement, you can print one by department. So here, you pick the department. Well, how does it know what department to put it in? It does when you sell it. How does it know that? Well, when you go to sell it, you're picking the department. So when you pick a water heater, you then pick your department. Plumbing. Plumbing what? Plumbing repair and replacement. Or could have been HVAC. How so? Well, we could have sold them a new heating and air conditioning system and then said, you know what, we might as well put in your water heater while we're at it. And then we put in a water heater. So it could be residential in that case. So it makes a lot of sense to have these departments, and don't try to create charts of account with all those department names on it. All right, so back to the serialized adjustment. Add serial numbers, this guy right here. So we have a department selector, but we don't really need to use it. Why is it there? Because people might want it, is the short answer. And we also might use it in the future for something, but it really isn't important. So now when I hit save and close, the same thing happens that happened to us earlier when we put in that unit for the first time, that air handler. We're adding these to the available inventory to sell. We are debiting our inventory asset by $365, and we are crediting equity by $365.
James,
Any
can I make
question?
a comment?
Yeah.
I think that this is very important for the sales team to understand what you just went through here. And I just want to elaborate on it a little bit more so that they get that when an invoice is created and it tags that water heater and it tags it to the residential install department, in the background, what the system is saying is that somebody from the residential install department walked to the warehouse and grabbed that water heater to go install. So it's telling in the background the financials that the residential install took the water heater from inventory from the main warehouse, and therefore that needs to be a cost to that department, and the revenue was recognized by that department at the same time, but by simply just clicking that one drop down box on the invoice and telling it what department.
Yeah.
And that, I think, is critical. Like the sales got to understand that fully, guys, because this is where whenever a company brings up and says, well, why don't you have a separate inventory department for plumbing and a separate inventory department for HVAC? You don't need it because of this key feature that James just explained.
Right. And I agree with all that. And they could even see it as a negative if you're not careful. If you don't explain this thoroughly and have the confidence that we do it correctly, they may get off the demo and say, you know, the one thing I don't like about Total Office Manager is they don't have departments in their chart of account, because that's what they're used to. And they're used to that negative. So you have to explain, not only do we not have it, that's an asset, that's a benefit. You don't want that. You don't want a huge chart of accounts that's departmentalized. You want the departments to take care of it. So you reiterate this department list and say, this is taking care of it. Other questions or comments?
No.
Okay. All right. So this adds the serial number, and we hit save and close. Now, don't forget, you still have the ability to add items, serialized items, traditionally. That is, you create a PO to buy one, and then you receive the items. And then once you receive the items, those items go into inventory. The difference there is you have a vendor that you bought them from, and it creates accounts payable. It creates accounts payable. There's no increase in equity. There's no increase in equity. So let me tell you why. You got to have at least two transactions, two things. You have to have a credit and a debit. So you're crediting the inventory asset, making it go up, and you're debiting your accounts payable, which is money you owe people. So they offset each other. You could buy $1 million worth of air handlers today. And that means that you put $1 million of assets on your balance sheet. Good for you. You're a millionaire. No, not quite, because you owe somebody $1 million. So you got $1 million in assets, but you owe somebody $1 million. Your equity did not go up. But when we added the items without buying them from somebody, we added them out of thin air. It's as if we found them in the street or in a field somewhere. We added them to the system, but we don't owe anybody any money for them. So our asset went up, but we couldn't make our liabilities go up because we didn't owe anybody anything. So we had to make our equity go up. Of course, our equity went up. Imagine if somebody came to you and put on a $50,000 roof on your house and told you, you don't owe us any money for it. We did it for free. Your equity would go up, wouldn't it? The equity in your house would go up. All right. Any questions on that? Okay. So let's talk about the other adjustments under company, inventory adjustments. That was serialized. We could also do a non-serialized adjustment. Here are the prior adjustments that have already been made. I can right-click and do new, and it's very similar. We have an as-of date. We want to adjust the quantity up or down, or adjust the value. Now, this is important. You have two options here. You can adjust your quantity up or down. So in other words, you could say, look, I just discovered I have 10 more of these or 10 fewer of these than I thought. So you could go pick an inventory item, and it tells you what you have, but you just discovered the main warehouse has 10 of these. So you could type in 10. You're about to add 10 of these. Now, just like before, we had the ability to put in a unit price. And maybe they're now worth $10 each. So you're about to add 10 of these items to the main warehouse, which is going to debit or increase your inventory asset by $100. And since you don't owe anybody any money for this, your equity is going to go up $100. If you wanted to job cost this $100, you could. Now, in this case, it won't matter because we're adding. But if we were taking away, because our new value could be less, we could job cost it. So let me explain. Let's say that you took 500 feet of wire to the job and it disappeared. Somebody stole it. So you have to take 500 feet more wire out to the job. How do you make that 500 feet disappear? You could put it on the invoice, but it really wasn't their fault. It just got stolen from the job. It happens all the time in commercial work, especially. So you don't want to put it on the customer's invoice necessarily. You could, and have the retail price at 0, and you could type in a description saying that the wire got lost. There's options. But typically, you'd go in and make an adjustment. You'd make that 500 feet of wire disappear from inventory. And you might want to job cost it. It doesn't mean they're paying for it, but it should mean that your job costing report should reflect the shrinkage, the loss. So you could go find that job. And then your account could be something called shrinkage. It would not be called cost of goods sold because you didn't sell it. It was stolen from you. So you would have something we typically call shrinkage. That's the term the industry used. This is inventory that gets lost. So that's if you're decreasing the inventory. But if you're increasing it, then you want to put it in the inventory account. So I'll go find inventory, other current assets, inventory. All right, so I am about to change the quantity on hand in the main warehouse from 0 to 10. I'm telling the software they're worth $10 a piece. If I had to go buy them, that's what they're worth. And that's going to increase my assets by $100. I could also say 0 if I wanted to. I can still sell these. It just means that I'm not creating an inventory asset. I'm not creating equity. Generally, you'd want to put in the price of what you'd have to pay for it if you went and bought it. Now type in a memo. Just found these in the main warehouse. Wow. Count. I like a good memo, and so do good bookkeepers. So in a sales demonstration, you typically want to put in a memo because the person watching, if they're an accounting person, they're into memos. And then, of course, you give it a date, like 2020. And that's the date that this all becomes effective. Hope it cleared out my, I'm glad it did that. I typed in 26 by accident, not 20. Notice the numbers changed. The main warehouse now has -1, because it's looking to see what was available on that date. And that's pretty smart software. So now I'm going to go back and do this again. I'll type in 11, because not only did we not have -1, we ended up finding 10 of these. So I'm going to put in a new quantity of, new quantity of 10. Yeah. So I'm going to put in a new quantity of 10 because we have 10 of those. And then the unit price, those are still $10 each. So now it says 110 because it's making up for the -1 that's not possible. That's just bad bookkeeping. That's $10. And then it's putting in 10 more, because remember, that says new quantity, not how many should I add. It says what's your new quantity. So that creates a $110 asset that's going to go on the balance sheet under inventory. And that's how I adjust inventory on hand. I can hit save and close or save and new. Any questions on that? All right, now I'm going to do save and new. And I'm going to type in 2020. This time I'm going to hit value. And I'm going to go find the item. Now, this is not typical. You don't typically do this, but you can. What's happening right now is R410. Let me find refrigerant. So refrigerant, especially refrigerant like R22, which no longer exists. I don't think I have that in here. But R22 is no longer manufactured. And the value of R22 can appreciate like gold does, like gold and silver. And you might want to go in here and increase or decrease the value of your inventory. So right now, the software is looking at all of these items, and it's telling you that the value of these items is $5,828.25. That's the value. What do you want to change it to? So you can make the value go up or down. And again, most companies don't bother with this. The IRS doesn't typically care if you do this. And in fact, there's rules about it that I won't get into because, again, we would never get into it around here, in tech support especially. Even on-site training wouldn't get into this too often at all. But you have the ability to decrease the value of your inventory if, in fact, it has become obsolete or it's not as valuable for some reason. But also, you have the ability to increase the value of your inventory if it is going up in price. If you were a jeweler using Total Office Manager and you had Rolex watches in stock, they would go up in value over time. They usually do, even though Rolex are overrated, in my opinion, but that's another story. But they go up in value. So once a year, your accountant might come to you and say, I need you to go through your inventory and revalue your inventory. So any watch that has a lot of gold, just the gold might go up in price. The rings, necklaces, things like that. And you might be told by your accountant you have to adjust that inventory up or down. But most contractors don't need that feature. It's usually to correct a mistake. Where in the past, they have done poor bookkeeping and the value of their items is completely out of line. All right, so I want to underline that statement. That's real important. Most companies don't use this feature because their inventory has depreciated or appreciated in value. They use this feature to correct prior bookkeeping mistakes. Like they sold into negative territory and they never fixed it. Or they entered the wrong pricing. Or they entered inventory and they never put in a price and they should have. Whatever. So this fixes that. And again, you could job cost this. You typically would not. You would job cost it if you wanted to. You certainly have to pick an account because remember, you always have to tell the software what chart of accounts are affected. Your chart of accounts are very important because this is a list of all the ways money can come in and go out of your business. That's your list, and it's really important that it be set up properly. So if you're about to make the inventory value go up or down, then you need to tell the software what's going to be affected. Now, one thing's for sure, the inventory is going to be affected. The inventory account's going to be affected. This is wrapping it up. We're going to wrap it up here. One thing's for sure, it's going to go look at this item and figure out what the asset account is. You don't pick that here. It's going to find that asset account. And it's going to make that asset account go up or down. That's the debit. So if it's going to go up, it's debiting. If it's going to go down, it's crediting. Remember, assets are ass backwards. So sorry for the word, but that's I guess that's not a horrible cuss word, but it's ass backwards. It's how I've always remembered it. So you debit to go up, you credit to go down, because assets are ass backwards. That's an easy way to remember it. You just don't say that in Sunday school. So we know for sure that that account's going to get affected. You can't do anything about that here. But if you're going to make it go up or down, you have to have some other account. And so that is oftentimes that shrinkage account. Right here, shrinkage. And it could be called something else. It could be called inventory appreciation depreciation. And shrinkage could be reserved for theft. The industry term is shrinkage and spoilage. Now, look at that term spoilage. Grocery stores probably wouldn't want to own Total Office Manager. But what if they did? they would use this to take care of yogurt and milk and dairy products that they threw away. They never sold it and threw it away. So you can have spoilage. It's the same thing though with parts. You could potentially have a part that's just no longer useful. You just don't even need it anymore. And so you could call that spoilage because it didn't shrink, it wasn't stolen, it didn't get lost, it was spoiled. It became obsolete. So you could type in the word obsolete instead. You could have shrinkage and obsolescence if you wanted to. But the term that most accountants look for is shrinkage and spoilage. Even though those words might not quite be right for everybody, those are the terms that most people use. So if I'm going to make this value go up by $10,000,
James, your microphone's quit again.
shrinkage and spoilage. So I guess we got disconnected and reconnected. I don't know what the problem is today with our internet. It's either Chime or it's the internet. Okay, so that's that. That's